Welcome to the Brew. Today, Friday, it is Market Watch with Paulina Likos. Tech soars as EV startups struggle. Today's topic. So let's get right to it. I'm excited about this one. Yeah. Hold on a second. We got to crank that louder.
I know.
I want to crank that out. Paulina, good to see you. Guess what? You are radiant. You are the lights all around you. What a new angle. Unbelievable.
Thank you. We finally made it work with the lighting.
I love it. And you're so centrally themed here that we can't see the Christmas tree behind you. And I love a gal who prepares early.
Right?
That's awesome.
Yeah. If you keep it up all year round, you don't have to prepare, right?
I love it. That's
happy
awesome.
Happy Christmas, everyone.
Happy Christmas. Okay, we got to get to it because we have a little bit of time. So tech soars as EV startup struggles. So we're talking about NVIDIA a little bit, Apple, I think another one of the EV companies. What's on your mind with this stuff, Paulina?
Yeah, so there's a few things that are going on in the market, and I thought we'd start out at the top with overall how the stock market has been performing since the beginning of the year up until today. The S&P has reached all-time highs 30 times this year.
30?
30,
like
30. Yeah. And not only that, but Wall Street is saying there's plenty of more room for the markets to run.
Wow.
So that means right now, getting into the details here, the S&P has gained roughly 15% this year, the NASDAQ even more, 20% so far. We're just at the middle of the year here. We still have another 6 months to go. Of course, there's no surprise here. A lot of this is being driven by the tech stocks. And now, since we have 6 months to kind of review what's been happening and try to forecast where the markets are going from here, you have firms like Goldman Sachs. They increased their target for the S&P. Evercore, Citi also did the same thing. It seems that the market is getting more confident now on expectations that the Federal Reserve is going to be potentially cutting interest rates at least one time this year in the last quarter of 2024. And what they're looking at in terms of, making this assessment is looking at the economy and assessing how that's going. And right now they're thinking, okay, the economy is chugging along, at least based off of the economic data that they're looking at. Inflation appears to be cooling as well. So these are some of the factors that are going to be boding well for companies' earnings and their stocks. So that's kind of what they're looking at to assess the current market environment and see, how the economy is going to be performing. And of course, the stock market and the economy are different, but they definitely contribute to how they both interact.
Got it. Okay. So would you say you're bullish still? I mean, I know this isn't advice. I get it. Just your opinion. Well, because the reason I ask that is I'm with you on this. This market is insanely resilient, right? We went through massive interest rate hikes. We went through inflation. We went through, just in my opinion, the worst of the worst events. And yet this market didn't budge. It seems like it never really got heavy. And I keep fearing the shoe's going to drop somewhere, right? I'm not saying I'm bearish. I'm not saying I'm super bullish. I'm fearful that we're missing. Someone has something hidden under the cover somewhere that they're going to go one day. Whoop! Look at this. I'm like, oh, that's bad. So I don't know. I'm crazy. I get it, but
no, you're not crazy. I think you should have a healthy amount of skepticism, especially after such a massive run. Of course, though, investors are bullish. They're putting money to work. And of course, there's no doubt that the market is being pushed by just a few stocks. That should be, another layer of skepticism when you're making your assessment here. 5 stocks are pushing the market: Microsoft, NVIDIA, Alphabet, Amazon and Meta.
Mhm.
And analysts think that, this trend could continue,
Mhm.
but, there's still obviously concerns over, the growth rate of these 5 companies, and not just looking at 2024, but for next year as well, and the years beyond that.
Sure.
How much can these companies really carry the market for
Mhm.
the years to come? It's
Mhm.
it's definitely a good question.
Interesting. Mal, how do you feel about this stuff? Do you think the
Yeah.
market's overdone, or what are you thinking?
So,
Wait, so
we
hold on
are
a second. What is that behind you? Is that like
my
a
kaleidoscope. I had such little sleep last night that this is probably a reflection of my brain right now. It's just
There's a
lost.
lot of brain there, Mal, just so we're
Yeah,
clear.
I don't know
Okay?
what's happening here.
All right,
So
sorry.
yeah, so I think, we are in new times, and so we have all of this access to information. So the only reason a stock market crashes is if there's a consensus and everyone, pulls out at the same time. Obviously there's other components, but that's a good one. So if fundamentals and technicals are visible, that might, hold this, otherwise might look like a bubble, about to burst. But
Mhm.
one thing I'm really interested to see, to keep an eye on, are the commercial real estate maturity dates that are coming and how that's going to affect the stock market. And, the conversion of those. A lot of data centers could feed into that. We don't have, a lot of people aren't going back to work, which brings me to branches, bank branches. We're going to see a lot of closures happening there. And that's partly due because it's, the interest rates are high.
Mhm.
And so it's hard for banks to make money. And also it's just getting more expensive to hold physical locations, because the digital age, everything's in our pocket. So I
Mhm.
think those might have a massive effect. But what do you guys think? How do you think that'll affect us? That's your wheelhouse, Paulina.
Yeah, I'll say this, being in the New York City area, I think that the commercial real estate market here is definitely in a very challenged situation, and the whole, COVID really shifted everything. Everybody, a lot of people are now capable of completing their work from home,
Mhm.
and that trend is not going to be changing. So obviously that is having a huge impact on the commercial real estate market. And as a result, the business centers are not as robust as they used to be. And that's a reality that the market is not only facing here in New York, but also in other major cities across the U.S. And it's not looking good for that market right now.
Yeah. Lex, would you throw protective puts on everything? What would be your
Like I told you guys this before, I've been in the trading business since, the late 80s, let's say, and I've been short the market since then, because I lived through the 87 crash, and that was terrifying.
Yeah.
Now
Yeah,
you're
yeah.
thinking, wait, this idiot's been short the market for 30 years or whatever it is, 35 years. I didn't lose any money for 35 years being short the market. Now that's just testament to what we did as market makers. We're very different. But I always have had this fear of the downside, especially when we get into an environment like we're in now, where the market, in my dense brain, is defying gravity right now.
Right. Yeah.
And when it defies gravity, I get such the opposite feeling. And
Yeah.
I'm always wrong for a long time. I'm ultimately right, but I'm always wrong until I can't stand it anymore, and I lose so much money by being just short this thing that I say uncle, and then it goes down. So when I say uncle, you guys should get short.
Right. It's like that. I heard that rumor where it's the 90-90-90 brokerage rule, where they'll sometimes take the other side. So
Yeah.
so whatever I say, do the opposite. Is it like-
Yeah. But I'm being a little silly about it. But
Yeah,
my feeling is that I'm not fearing a crash. I'm not feeling a reset of this whole economy. It doesn't feel like the '08 situation where, there's tranches of bad debt piled on some good debt, and all of a sudden it all just, house of cards comes crashing down. I'm not feeling that yet. I don't think that's the case. If we get into an environment down the road where all of a sudden interest rates do start receding, and we've got good policy in place. I mean, maybe we change administrations. You never know. Maybe it's a little bit more business friendly administration. If that could happen, we've weathered this. This has been the hardest storm ever, in my opinion. And if we get into a really, good corporate business climate with great policies, this thing could explode still. And Paulina's point about, all this technology, we've got NVIDIA passing Apple and Microsoft in terms of market cap. This is a big deal that takes you out of dire situations. When technology wraps its hands around you, all of a sudden your ills in the marketplace seem to go away. It seems like technology is a great bailout all the time.
Mm-hmm.
I don't know how you feel about it, Paulina.
Yeah, that's kind of the second piece of news I wanted to touch on. NVIDIA's market cap surpassing Apple and Microsoft. So now NVIDIA is the world's most valuable company. Its market cap is 3.4 trillion. That's more than Apple's 3.29 trillion, more than Microsoft's 3.2 trillion. Shares are up 180% year to date. And I'm sure the number one question is, does this thing have more room to run? And I was reading an analyst note, and they said that this uptrend for NVIDIA stock remains firmly in place. So there is continued optimism on NVIDIA's growth trajectory because that there are companies that are in different phases of their AI integration. Some are developing faster than others, and those that are ahead of the crowd, already need these new iterations of AI training and inference technologies than they might have had maybe even 3-4 years ago.
Right.
So the AI trade, the AI boom is really carrying the economy and is something that analysts believe is going to continue to benefit NVIDIA and companies that are similar to
Gotcha.
NVIDIA. Well.
Yeah. Mal, guess what? I was short NVIDIA for a while until I talked to Paulina on one of these shows, and then I went long it.
No way.
Yeah, I did. Very, very, very structured. I did some butterfly stuff to the upsides, paying dividends now. But here's the thing: as traders, and look, I'm not an investor. I'm a trader, right? I'm not in for any long haul. I grew up more of a trader. If our model is, if you can't beat them, get on board the train, man. That's the deal. So right. NVIDIA to me seemed like really overdone as well. But having said that, I think I understand the story behind this too, and what they have to offer to this marketplace. I think it's probably at a smattering of where it's going to go. I really do. I think it's just this could be just epic with this AI boom. I think it could be just crazy for them. Crazy good.
There's talk that AI will remove jobs, but you have to the example of the refrigerator. So the refrigerator is invented, and all these new products were invented because of it. You could carry ice and Coca-Cola cans and you name it. So if a good question to ask, and I think this was Jeff Bezos, but he said, everyone asked me what will change in 10 years, but no one asked me what will stay the same in 10 years. And so storage tech and networking and semiconductors will probably remain the same, but what's coming up is augmented reality. And when those things come online, it really does have a correlation to that real estate market as it becomes easier and easier for all of us to meet with, some Ray-Bans. Interesting to see what happens there.
No, that's nuts. Go ahead, Mo. Sorry.
So how are some other sectors, like what's the EV sector doing?
Yeah.
Speaking of tech.
So I see your notes here, Paulina. There's one little, we're burying someone here, I think.
Yes.
Yeah.
We have
an EV burial.
An EV startup called Fisker. It's going bankrupt. So earlier this week, they filed for Chapter 11 bankruptcy protection to sell off its assets and to restructure its debt after they spent just so much money on EV production. And, my first reaction to this was, it wasn't really a surprise. Because as we have talked about many times on this show before, the EV market is still pretty slow. Consumers are not all in when it comes to going electric. And that's making companies like Fisker and even EV leader like Tesla and other legacy automakers. I cover Ford, and I know that it's been a huge challenge for companies in this space. companies like Ford and GM, Tesla, they are able to weather some of these challenges because they have strong cash flows and strong overall businesses, strong balance sheets. But a company like Fisker that doesn't have that strong foundation is inevitably going to have major challenges. And we saw that, this unfortunately was their fate. Just for some background, Fisker went public in late 2020, but then they delisted in April of this year. So that's an unfortunate news for Fisker. But given the environment, it's not really surprising that it went down.
Yeah. So sorry, go ahead, Mal.
I was just going to say that there's talk that there's not much margin in selling new cars. And so a lot of car companies rely on repairs. And so having some of these already established companies get into the EV market, they can carry that initial growth. So I wonder if, it was amazing that Tesla broke in, but I wonder if it's probably a good business model to get acquired by one of these big guys so that they can carry on, into starting to get a fleet that needs repairs. And I wonder if robotic assembly will start to diminish those repairs, in which case, what does the automotive terrain look like going forward?
Yeah, those are good points. I wonder too if a company like Fisker, it seems like Fisker was around a long time ago and then went dead for a while and then came back from the ashes recently in 2020, I think you said, Paulina. Were they here a long, long time ago or not really? Am I missing that? I thought they were around for a while. No?
I'm not sure about the history.
Or was that Frisky, that new cologne?
It was. Oh, that's what I'm thinking.
Okay.
It says it was founded in 2007. So I think I might be onto something here. And then it went away. And then, it was before EV time. It wasn't ready yet. Tesla came along. Hey, let's resurrect this thing here. Beside the point. But I guess my question is does it make sense for someone like Ford, GM to kind of scoop these people up? Because they do have technology, right? They have EV technology. Would that be a nice fit, or is that just like probably too expensive for someone like them to do?
I think that's a good question. Right now, Ford and GM, they're spending billions on creating factories to build out EV production. So they're spending their own money on their facilities. Actually, Ford, I know, I'm not too much on GM, but I know that Ford has their own subscription service for their EVs. So they're actually doing a lot on the technology front. So I think that these legacy companies have enough, technology in place and enough investment in that technology that they can do in order to, focus on that rather than maybe acquiring somebody else, or maybe instead of spending all this money to acquire a company like Fisker, maybe it would be cheaper to kind of do it on their own. So yeah, that's a good question. And
I wonder if some of these companies have proprietary technology. So I think Fisker was coming out with next gen solid state batteries. That was, the biggest hype, which is faster charging times and longer range, et cetera. So I wonder if it's a case where it's cheaper to acquire than reinvent the wheel, then maybe that's the case.
Yeah. There might have been some talks between Fisker and Nissan, if I'm reading this correctly, in the past. I think they've died though, so that nothing went further there, at least not to date. So anyway, well, let's keep an eye on that one. Interesting. I'm gonna do a little reading on Fisker and see what their liabilities and everything looks like for them. But sad to see. But you're right though. Bottom line is the demand for these EVs has really plummeted, and it's probably across the board. I think Tesla has a gorilla position in the market, so wonderful for them. And they have price kind of power too, because they can lower prices like they did and not really terribly affect themselves. He's become a pretty good genius at figuring out where his money lies, and he's doing these things online. We talked about this before, where you can buy premium service, you can buy auto self-driving, and you can do it as a subscription, and all of a sudden he's got a revenue stream, right? So he's been very clever at that, I think.
And don't count out the Chinese automakers as well. The China EV makers, they're potentially getting ready to come to the US, and And I think that's going to be huge competition for
Yeah.
U.S. automakers.
No, I agree.
And for I think BYD I think they're quite slow and feel like golf carts, but that's just me. I like fast cars.
Yeah.
But
Okay, cruiser. Whatever.
So,
All right. Guess what? We got to go.
all
Sorry.
right, guys.
It's time to get on to the weekend. I am going
Happy
to
Friday.
throw longest day of the year was yesterday on Thursday.
It felt long. I'm telling you, yesterday.
LDOTY. Put that into your online shopping promo code. See what you get.
All right.
It will work.
Okay.
All right. Paulina, have a great weekend. Great to see you as always. Love the new angle. Very bright, effervescent. Great. Molly, the background, little brain light.
I had to work on it.
I know.
I just felt flat today.
No worries. All right, you guys have a great weekend. See you next week. Market Watch next Friday.
All right, let's do
See
it.
you, ladies.
Thanks, guys.
Bingo.
Bye, guys.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.